Another point out of that is friction is failure, no matter where it is in the system. And convergence is a lot about reducing friction. And to emphasize something that Jordan said regarding the strategic importance of payments, we did a study last year looking at major online merchants and where they had payments in their ecosystem, whether it was just an add-on at the end or they actually had a strategic place at the table. And what we found was an absolutely perfect correlation between successful e-commerce corporations and the level that payments were in the ecosystem. The higher up they were, the better off the company did. So payments are a strategic tool and should be seen that way. So with that, we're going to go look to the merchant side. Merchant-centric mobile payments and loyalty solutions. Mobile wallets just make sense for merchants. It gives them instant access to customer data, and for customers, the value proposition is less clear. In fact, the value proposition on a lot of digital wallets is functionally worse than pulling a card out of your wallet and using it somewhere else. And that's one of the challenges clearly that the pays have had over the years. Hopefully that'll be getting better over time, but that's one of the problems. So that's what we're going to talk about. Our moderator is Jack Philbin from Vibes. He's a co-founder and CEO of Vibes. And with over 20 years in mobile payments, he's one of the industry's premier thought leaders. In addition to his role as CEO of Vibes, he serves on the Mobile Marketing Association's North America Board of Directors and the CTIA Wireless Innovation Council. So with that, I'll invite Jack and his panel to come on up.
Mobile wallets, mobile payments, loyalty solutions. Where is it stuck? Where is it working? Where can we speed it up? Again, I'm Jack Philbin. I just took a taxi here from my company, which is located right near the Sears Tower. So Chicago-based company. And glad everybody can make it out. Sorry it's a little rainy, but we had a beautiful weekend. Hopefully you're sticking around till Wednesday and can get the tail end of Chicago summer, which is the best city in the country in the summer. I always say if we had year-round weather like we have in the summer, there'd be 30 million people in Chicago, and that would be a problem. So the weather scares folks away, and summer's very special here. So I thought we'd just take a minute to the panelists can introduce themselves. We had a little bit of I'd say a firecracker phone call, so I know the content is going to be really good here. And we've got about 40 minutes, so I'll save 5 to 10 minutes towards the end for questions. But we've got some very different points of views on an emerging space, which is really important to everybody in the room and obviously to the ecosystem. So without further ado, let's just go down the line. Alan, you can start off.
Sure. So Alan Paul, head of business development for Card Free. We provide end-to-end mobile digital commerce stack for retailers, so mobile payments, order ahead, loyalty, engagement. Historically, have been in the restaurant space. Dunkin' is our largest client today. We provide the app, ordering platform, payments, etc. Team also built the Starbucks app as well as a mobile program, so a lot of history there.
Great. Brynn Sanders, I work for Lyft, which most of you probably know is the ride-sharing company based in San Francisco, California. I lead what we call platform business development and strategic partnerships, which is all the work that we do across the payment space as well as with our strategic partners, which include Apple, Google, Facebook, etc. Been with the company for about 4 years, and we think about how payments can drive loyalty and retention, both for our rider and our driver communities. Great to be here.
I'm Markov. I'm the head of strategic partnerships at GasBuddy. GasBuddy is the third most used travel app in the US and Canada. Historically, it was an app that showed you where the best price gas was and based on your current location. And about 3 years ago, we launched our own payment product, and excited to talk a little bit more about that and other topics.
Yeah.
Laura Townsend, I'm with the Merchant Advisory Group. We're a membership association representing about 150 of the large, some medium-sized merchants in the U.S., some of which are global. Our primary focus is education on payments, and we also offer kind of more of that merchant voice to try and address positive change in the industry. And prior to MAG, I was with McDonald's for, let's just say, several years. So I come at it from a very much a retailer perspective to the discussion today. Glad to be here.
And we love the yellow dresses, a tribute to the Golden Arches, right?
Yeah. Didn't wear my red pins. But.
So here are the topics that we're going to cover pretty quickly, if we can get through them all. So we're going to talk about ecosystem challenges. We're going to go through what's driving the international success in different markets that sort of moving faster than the U.S. And then the narrowing of the options for wallets. Then we're going to try and tackle loyalty, at least a little sliver of it, and then we're going to talk about payment innovation. And if I think I want to go deep dive in some area, I might. The context of why I'm up here is we're a partner. Vibes is a partner to both Apple and Google. We're probably the largest manager of loyalty cards and offers in the wallet. So not really on the payments side as much, but offers and loyalty. Seeing adoption. So Mark, I want to start with you. You got all fired up when we were talking about the ecosystem challenges. I think your quote was "Americans love their plastic."
Yeah.
And so what's just your view on ecosystem challenges, here in the U.S. primarily?
Well, I think what I was recurring, I'm originally from Ireland, but I've been in the US for 16 years, so I'm fully immersed. And I think the example I was quoting at the time the question came up, I was recently back in Ireland for a visit, and I've been away long enough that I'm not used to certain things back there. And I couldn't help notice, but when I went into every store, whether it was a coffee store or a retail store, every cashier said, "Go ahead and tap." And the first several times that was said to me, I was a little confused and stuck in my credit card, but did notice that every other person behind me was either tapping a phone or tapping a contactless card. And again, that was the example I gave how it also reminded me of a different but also similar change when I first, as a tourist, started coming to the US many years ago. I used to be surprised because I felt at the age I was, many people had a cell phone in Europe, but when I'd come to the US, people largely still had pagers. So it seemed that in the US, despite the fact that it's pretty much full penetration here, almost everybody has a cell phone, it actually was a little bit slower to adopt than the European market. And I also think it's the same with payments. When we were launching Pay with GasBuddy, there was a big debate internally on whether that should be plastic or whether it should be mobile wallets. We wanted it to be a wallet, but we understood that there were going to be challenges in both the terminals and the technology for acceptance, and also Americans' love of plastic and cash. In fact, I think it's 80% of all transactions in the US are cash and plastic, and cash is still at 30+%, still dominates transactions. And I also think I used to work with a m-commerce company called Rue La La, which was one of the very early flash sale companies, and at one point was the third or fourth biggest m-commerce companies. And I think a little bit of the distraction, even with e-commerce, is despite the extraordinary growth, it still represents 10% of all purchasing, and half of that 10% is basically Amazon. So I think that for us, when we started Pay with GasBuddy, the risk we took was going with an ACH-based product and shipping plastic, which seemed like unusual for an app-based, a digital ecosystem. But what has been fantastic is the fact that while we have mobile wallets, we still see that our customers have a preference and predominance for swiping plastic. And while, like e-commerce, I know that there'll be a time that e-commerce and m-commerce will be far more than just the 10% than it is today. I also think with payments, it'll continue to be very slow in the US, and a bit like cell phones, it'll feel very slow, and then and then it'll be sudden. So I think in Europe there's a lot more universal standards, and I also think one of the challenges right now is this idea of app fatigue. I don't know the exact reasons why JP Morgan have abandoned Chase Pay, but one can make some guesses in it, and I think user adoption is probably one of them. It's always surprising to me when people quote Starbucks as the #1 mobile wallet when it really isn't. It's really an awesome coffee experience where you can pay. It's the same with GasBuddy, and you can see with the numbers with Chase Pay, Apple Pay, Samsung Pay, very, very, very slow user adoption because not every customer is going to download 50 different apps in order to. So that's the difference in the European and the American market. I think that there's a lot more universal standards, and I think it's the VHS Betamax thing where there's too much competition for too many customers being asked to jump through too many hoops. And that's just going to really limit the fast adoption of mobile acceptance and transactions.
So we'll get to the narrowing of the options, but Laura, maybe what's your sort of take on the cause? Like, so we have this, sluggish adoption rate. Any ideas on the why?
Well, I don't think anyone in the market is really solving problems for the retailers. So, I'll use NFC contactless as an example. When I was with McDonald's, we were told this was going to be the next big thing, and here we are.
McDonald's had speed pass 15
Right.
years ago, right?
Yeah, right, exactly. But you think about the operational model of a drive-through, I mean, it just wasn't a good fit, and nobody solved for the drive-through challenge. Even today, I would say it's really not been solved when it comes to contactless. There's a good place for it, and maybe transit's where that place is. So we'll have yet to see. But I think our market was already fast when it came to payments. We were always real time, online as compared to Europe. I think they were very offline. So they weren't solving a problem for speed. They weren't solving a problem for the customer experience when it comes to just payment. So what merchants are trying to deliver, which we heard about, earlier in the panel just prior, is they're trying to solve for customer experience. And when you think about the payment piece of it, it's like the base or it's a core foundational. We got to get paid for the products that we sell, but it's everything around it that makes it compelling to the consumer. So I don't think anyone's delivered that roundabout, overall solution in a very good way. And so that's why you're finding retailers kind of do their own thing. And that's why you're seeing this plethora of merchant-centric wallets in the marketplace, because they do things like offer, you have offers embedded, they have loyalty embedded, they have even simple things like convenience of having receipts within your wallet so that you can do an easy return, things like that. So, I just think the market was a little bit in a different state for other reasons. I agree with your reasons as well, but additional reasons that make these new payment, options that are coming to market not a great fit. I think you'll see merchant. We always get the question like, isn't there going to ever be just one way to pay? No, there's not, because merchants fiercely compete, right, in everything they do. And so all those value-added services wrapped around a payment solution is where that competition will continue. So that's my take on it. I think it's just not been solving a retail problem. Payment has not been solving a retail problem today.
Yeah. And so with those merchant solutions, Alan, is that where Card Free said, hey, there's a gap here for an entrepreneurial business to sort of insert itself?
Yeah, our team has been in mobile payments for 10 years. We worked on the original Google Wallet, the NFC version of it back in 2011.
Before it was called Android Pay.
Before it was
called
Android
Google
Pay, when it was NFC, that was, I think, a Citibank MasterCard at 6 retailers.
Yeah.
Something like that, right? So we've been in that space for a long time, and having worked with the Starbucks of the world and Dunkin's of the world, that's where we saw the adoption, right, and the usage. So we said we're going to focus on the retail space because that's where customers are. But to Laura's point, that's all around utility, right? People use the Starbucks app and Starbucks mobile payment and their stored value card because you're providing utility. You're giving them loyalty and rewards for that, right? And then you can start adding on things like ordering, and that's what we've seen in the merchant space. We've not seen that in the Apple Pay, Google Pay space at all, right? It's a payment type. That's all it is. And so you're not actually solving a real problem. You may decrease the time of payment with EMV by like 5 seconds, but the order of magnitude is not great enough. But that is why you have seen Apple Pay, Google Pay for web transactions, right? Mobile web transactions actually do have some adoption, I think more like 30%, because that's solving a problem of manually entering a credit card. But I think for us, if you want to be successful in mobile payments for the Apple Pays and Google Pays, you have to put value around your payment. It has to be loyalty, it has to be rewards and other things. The challenge, going back to the ecosystem question, is that there are a lot of technological hurdles there with the point of sale, with pulling SKU level data from loyalty providers, whatever it is, that makes that very challenging. It's even challenging for a merchant, but at least in a merchant situation, you have somewhat of a closed ecosystem that you're solving for, versus Apple Pay and Google Pay having to go out and solve for everything.
For all merchants.
Right, and so they are getting to a place for single tap, for loyalty, rewards, and payment, and I do think that will drive adoption, but that is still going to be a challenge for them. There are a lot of hurdles for them to get to that point. And kind of finally, Apple Pay, Google Pay, all those guys, they want to own your data, right?
Yeah.
They want that data. They do not want to give it over to the merchant. And so the merchant, particularly the big guys, are like, why? Why would I give you my customer data? Why would I give you my customer? And so there's a huge battle between those two in terms of who ultimately owns the customer. And the merchant, if they can drive transactions through a wallet or an app or whatever it is, they're going to do that all day long.
Yeah. Now, Brynn, you guys come at it obviously from a different angle and massive scale and lots of international. So talk a little, before we get into international, we'll start with you there, maybe a little bit on the ecosystem challenges you see.
Yeah, I think a lot of kind of I echo the sentiment of what's been said here. I think coming at it from a place of being an app-based company where card not present is just the norm, right? You can't pay for a Lyft ride with cash or with a plastic. You have to put your card on file. One of the things that we think about is how can we use that card to drive added loyalty and retention of our customers? So how can we think about working on relationships with networks and issuers and the peer-to-peer folks to say, hey, if you want to be that card on file, because by the way, we're one of the fastest growing transaction categories and our frequency is like skyrocketing, we'll work with you to do that, but there has to be an added value. And that is challenging for us as well with the wallet providers, right? Because we lose all access to that data. We don't know what that underlying card is. For some it's better than others. PayPal tends to be kind of at the worst end of the spectrum, and Apple and Google sit somewhere in between for us. But we also are kind of seeking that solution to say, like, hey, is there one provider that really is going to provide us with that like added data, clarity, access, loyalty, retention, et cetera? If so, like, we will go integrate that partner, but we're not going to go make our payments screen look like, the Amazon who's who, right? It's infinite scroll, right? We also think about conversion, right? So we want to make that conversion when you download our app as easy as possible. So we try to think about payments as being just like, again, foundational type stuff that you just have to get through. So make it easier for us to onboard new customers, make it easier for us, frankly, on the driver side as well, to get drivers set up. And so some of that we've had to do ourselves. Like what we've done with our driver debit card, we're filling a need of when it came to a driver actually having to come in and enter their bank account information for us to pay them, we were losing people in that step. And what we found was a lot of our drivers are the unbanked and underbanked. So we actually came to market with a debit product that's a DDA because this is just in the US, limited markets today. It recently rolled out, but we're aggressively trying to expand it. But one of the reasons we did that was because, hey, this is solving something that we need to solve to actually like grow our driver population on Lyft, and no one was helping us solve for it. So we built it from the ground up. So it's a challenge as a on the merchant side, and it's something that maybe to Laura's point, like there isn't going to be one provider, but we are seeking those big partners who can help just make that process that much more seamless, and frankly, who can help us drive loyalty and retention and product differentiation.
Yeah. Mark talked a little bit about the international sort of user behavior differences. Have you seen anything with launches of Lyft in different markets that just make it much more streamlined?
So
Maybe some examples?
it's an interesting question. So today we are US and Canada only. So we haven't gone into the European markets where I think you'd probably see more differentiation, or in the Asian markets where you'd probably see even more differentiation. So for us, today, it's not something that we're necessarily seeing, but that's probably just a byproduct of the fact that we haven't gone into those two large international kind of markets where you would see such a differentiation, like in China with a WePay or something like that.
Yeah.
Can I add something into that? So one of the things that I would call out is the government intervention in some of these other markets has been such that it's almost India, by way of example, mandated that folks move to this non-cash acceptance.
Forced behavior. Right?
Forced, right? And in Europe, they've approached their, with the approach they've taken on, I will use the word interchange. I know it's a negative word, but it's very low cost. So there are barriers that exist in the U.S. from a merchant point of view that don't necessarily exist in other markets, or the government has made a position that is pushing the future of payments to be non-cash. So I think it's those dynamics also play into kind of the uniqueness of the U.S. much less just the breadth and complexity that we have here with the number of financial institutions and all of that all of what that goes into making that successful. So,
Yeah.
and change is hard.
Mark, any, not just in terms of general behavior, but GasBuddy examples from, success in other markets? Or
So our payment product that we launched about 2 years ago, Pay with GasBuddy, is in the US market only.
Oh.
Actually, we're developing a product now for the Canadian market, and it will be a different product based on the uniqueness. So there are some interesting nuances between the Canadian and the US market. The big challenge that we had, and this was there is phenomenal power in payments. This is going back to your earlier point when you solve a problem, because GasBuddy is actually a 20-year-old business. We've been around almost as long as the internet, and what we represented to the user was a very, very basic utility. So it was a pretty bold step for us to think we could get into the payment space. And in launching an ACH-based product, we used to be the app that told you where the best price gas is. Now we wanted your bank account details. That seemed like a very big and bold move. Now the good news is that we launched this about 2 years ago. We've about 600,000 customers that have bank enrolled with Pay with GasBuddy. They've done well over $300 million worth of purchasing. But again, we were kind of solving a problem for the user, because now we not only show you where the best price gas is, but we make sure that no US driver has to pay full price for gas again. And also we solved a loyalty issue in that there are 160,000 gas stations in the US, and even Shell is the largest, probably represents, I think, about 15,000. So the challenge is very little loyalty, because no one brand was everywhere you needed them to be. And what was unique about Pay with GasBuddy, that it works at over 95% of the 160,000 gas stations. So now we gave to the user essentially a free discount, 5 cents off per gallon, regardless of where you filled up, but you got to choose the brand, and in many cases you can stack the value. So again, and it transformed the GasBuddy business, because we went in from a pretty simple, albeit powerful utility, now to having a much more important relationship with the consumer. And once we converted our users now into paid customers with Pay with GasBuddy, our ability, and by the way, essentially what we do, we earn the interchange and we're giving the interchange right back to the customer. Last year, $90 billion worth of interchange in the US. No one wants to have a conversation about giving that away. We do give it away. So essentially, that's how we fund the discount. We give it right back to the customer. It's not directly a benefit for the merchant, but it's a better experience for the merchant in that the interchange is going to their customer to make that a better experience. And now the wonderful news is that the retailers are now funding additional discounts. So that's a good example of where a simple app, by introducing payments, really transformed the relationship with the customer.
Yeah, well, it's interesting to compare the merchant-specific examples. You guys are kind of attacking it at a segment, almost like a market level, whereas you're going customer by customer with those that want to lean in an environment where consumers aren't picking it up from the broader wallets that are even native to the phone. Have you guys looked at international as this is how we want to build in the U.S. or?
I mean, we're mostly in the U.S. International is challenging. Again, if you think about taking all those value-added components and trying to wrap them up in every country, you have a different point of sale, you have different payment providers, different loyalty providers, different standards, different regulations, all those types of things. So, and particularly with a lot of our merchants, they're highly franchised. So in the United States, there might be technological consistency across the merchant base, but then you have to change for every country that you go to. So Dunkin' might have 10, units in Saudi Arabia and 100 in South Korea, and so it becomes a bit of a challenge to solve for all those technological complexities. And I think, kind of going back to the last panel where they talked a little bit about standardization and those sorts of things, it is. I don't know how we get there honestly in the United States with so many things, but I think it is important that, particularly with legacy players, they start building out modern APIs to build to, both from a point of sale perspective as well as a banking and financial institution perspective, because that is honestly a challenge for us sometimes, is even going in and having these integrations with financial institutions. It might be technology that's 20 years old, and when you try to do that and combine it with loyalty and everything else, it just becomes a huge pain.
Yeah. So what is your opinion on we called it the narrowing of the options in terms of, and Mark had mentioned how JP Morgan sort of backing off Chase Pay. Do you think we're headed to this Google Apple world, or what's your take?
I think we'll probably have a few. I mean, I think Chase Pay provided no value, right? There have been, and Apple Pay and Google Pay don't either, to be honest with you, right? They're at something like 1.6% of transactions in the United States are NFC based. So they're not doing it either. They just have money and desire to stay in the game.
Right.
So I do think it'll narrow probably between Apple Pay, Google Pay, maybe somebody like a PayPal, Amazon, people who do have card on file already. Like that's the biggest part.
Right.
It's extremely challenging to build a consumer brand.
How long does Samsung stay in the game?
Yeah, I mean, right. I mean, it's interesting to see that. So I think you will see a narrowing, but there will be options. There's not going to be one app that rules everything from a payments perspective. I don't think it's going to happen.
Right.
And I do think you will always have merchant options, right? Is somebody going to download 50 apps? No. But will they download 5? Absolutely. And that's where they're most loyal or where they transact the most often.
Mm-hmm.
So you might have 5 different restaurant apps and then a Grubhub app.
Yeah.
That might be the case, but I don't think we're going to get to a place where there's no merchant branded anything and it's all ruled by Apple or Google.
Yeah. So Laura, how do the merchants help sort of not just facilitate this, but accelerate it? Even if it doesn't end up narrowing as much, how do they drive the ecosystem forward so that there's progress?
Just generally in.
Yeah, like merchants view right now, they might be a little, tentative,
Mhm.
but what is it going to take for, like the merchant, associations and all the merchants to say, like, this is where it's going, so let's speed this up. Here's what we need.
Well, so we do a good job, I think, on a regular basis of communicating with the payment stakeholders in the market today, kind of the incumbents on, if you deliver on X, Y, and Z, we think this is, going to be successful from a merchant point of view. But I think, again, I believe that the merchants are leading the way in what should be delivered in the marketplace from an alternative type of payment solution. What we also think about too is as real-time payments comes, the opportunity there of delivering on some unique use cases and experiences could be capitalized on. So we as a merchant association are participating in the Faster Payments Council, and we are helping to encourage the future of payments in that regard that will meet merchant needs. So one of the things we'd love to do is get in front of fintechs to talk about here's what merchants are looking for. Here's what problems and pain points if you could solve for. We would be excited and ecstatic for you to bring something to market. What I fear is that, and I think the panel mentioned it earlier, is fintechs obviously their first love is the bank and the financial side of things. But if they're only talking to the banking side of the equation, they're not going to bring products to market that will be deployed by and accepted by retail. So I think the important thing is we are trying to encourage the ecosystem.
Is the they like an Apple Wallet and that team?
I think generally, I would say that's one example,
Yeah.
but I think we would love to have the ecosystem, all stakeholders kind of get together and talk about what it is that would solve our pain points. And I haven't seen that from Apple personally.
Mm-hmm.
I'm sure they've knocked on every door of the large retailers. I know we were one of them at McDonald's. But are they listening to what it needs to be solved? When they just launched their Apple Card. Now it's mobile first, but you still get a titanium card if you want. I mean, that play right there is their approach to benefiting from the revenue stream.
Yep.
That doesn't benefit the
Trying
merchant.
to be preferred tender in their own wallet,
Right.
most likely.
And I will tell you because I got it because that's what I need to do is
Yeah.
just watch how things are working in the marketplace. I said, no, I don't want it to be my default, but
Guess what?
somehow it's my default.
Yeah.
So, even the consumer experience of that is really frustrating, but I don't think they're delivering anything unique to bring a value proposition to the merchant community.
Yeah, Mark, I'll go to you because you had some, critiques that, they weren't providing any loyalty solutions, Apple and Google specifically, on this front. And so, is that what they need to do, or, what's your opinion?
Well, I think somebody mentioned it earlier just with apps. So yes, people are downloading 5 apps, not 50, but we've actually now got to a sort of maturity in the app market where, you now have on average in the US about 50% of customers are not downloading any apps whatsoever on a monthly
They're
basis.
deleting.
And that number is growing. So app fatigue is becoming the new buzzword.
Yeah.
So even in the app economy where GasBuddy sits, it's all about a consolidation of services. So basically, and also what I'll add to that is the question you asked, how long would Samsung last? Well, maybe they had a little bit of an advantage in the sense that the moat is, you can launch a product, but how do you get people to download it and engage with it? And now the barriers to entry are colossal. I mean, they're literally, 1 million plus apps in each store with, I think it's like 50,000 apps launching on a monthly basis in each respective store. So again, when you look at those that, at GasBuddy is basically consolidation of services. So we used to show you where the best price gas is. Then we launched a fuel purchasing product. We launched a parking product. We launched an insurance product, a repair and maintenance product, and other bits and pieces that are coming. They're all tied around basically reducing the recurring burden of a non-discretionary expense. 40 million Americans spend $1 billion a day in gas. And again, what we're trying to do is that we know there are other companies who do all those things, but they're having trouble getting people to download those apps. GasBuddy, we've 12 million monthly active users, an app that's been downloaded close to 100 million times. I think the advantage that Samsung might have, that every time they ship a phone, they do a very good job of surfacing Samsung Pay. That was a major challenge for Chase Pay because they have to invest in institutional media.
They got
to spend hundreds of millions of dollars to drive downloads, and obviously that's possibly a result of where they ended up. So I think Chase Pay isn't going away, I assume, but it'll basically power other apps, and I think that's where the future is. And I also think as well, it's going back to your point about solving problems. When I look at awesome fintech apps, Acorns is an example I like to use, that are truly solving problems for users, helping people to save money maybe that they otherwise wouldn't have, making life more convenient, and also serving all ends of the market. Credit products are the top end of the market, but Pay with GasBuddy, because it doesn't require a credit check, it's an ACH based product. It's very forgiving for someone that doesn't have a perfect credit score. And then there are other products that have to be considered to serve the unbanked or underbanked, and there are lots of new fintech apps that are coming in to serve these. And by the way, they're not coming from financial institutions, they're coming from other startups that are solving these problems. And I think over time, you'll see consumers relying less and less on the financial institutions, and possibly more and more on app-based fintech products that might be not solving all the problems, but solving the most important ones for customers.
Yep. I want to come back to the payment innovation in a second. We'll start with you, Brynn. But just to close off on loyalty, Alan, I mean, do you think that's really been the differentiator for the successful brands that are out there, whether it's a Starbucks or Dunkin'?
Yeah, I do. I mean, we actually saw it with Dunkin'. So Dunkin', when they launched, was payment only. There was no loyalty tied to it. There was no ordering or anything like that. And then it was very, very small, very, very flat. As soon as they added loyalty, we started to see the hockey stick adoption. Starbucks pretty much saw the same thing. And as you add services, that's when you see additional adoption, the different additional payments come in. So I absolutely am a huge believer in rewards when it makes sense, or at least, again, adding utility to whatever you're trying to do around that payment.
Right. And so to merge these points, like the incumbency, the fact that these, like a Google Wallet or a Samsung Pay, for instance, an Apple Wallet, they're native to the device. I mean, that matters, right? Because there's the presence, but they've got to sort of, complete the value exchange, if you will, so that there's a need for use.
Well, the interesting thing is that it's not just utility for the customer, right? To Laura's point, it's utility for the merchant.
Correct.
Why do I want to play ball
And
with Apple Pay?
why should I even promote this or
right?
do it?
Why should I promote it or do it? And we've had those conversations with very large players, with the Amazons of the world, and they just don't see eye to eye in terms of who owns the customer and who owns the customer data. And otherwise, there's no real value. Like, why am I going to push your payment type if I get no value out of it? Right.
They have to start to think about merchants as being the distribution channel for them. It's ultimately, I think, like a big part of it, right? And to your point around, like, you have to listen to, like, what a Lyft, what a Dunkin', what a Starbucks wants or needs, and instead of coming to the table and saying, wait, we just developed these 5 new technology features and you need to integrate those into your payment system. It has to be flipped, right? It has to be, because we have 20 million monthly active users who are coming in to our product, right? And so we can be a distribution channel for you, and frankly a very powerful one. But until there's more of a cohesive relationship, it doesn't make a ton of sense.
Yeah, merchants want access to the consumers that you have on the card and file that you have. They just don't want to get screwed in doing so.
Right.
Yeah.
What were you gonna pipe in?
Yeah, I was going to say, the other challenge is the way that the industry has really kind of tried to push forward their agenda is, I'll use the example again of contactless. If I'm a point of sale, or if I'm a merchant that accepts contactless at the point of sale, and Apple Pay gets introduced, I'm automatically required by their honor all cards rule in the industry to accept that Apple Pay wallet, even though I have no commercial relationship with Apple. And how is that data going to be used? I have no insight into the level of usage of Apple may have on some of that transaction level data. Now they don't get SKU data, but it's still inserting players into your environment without transparency. And that, from a large retailer perspective, is hugely concerning.
Yeah.
Especially if you think about, and I know there's probably a very large controversy in this concept, but Amazon Pay, if all of a sudden Amazon decided to create a wallet that was based on contactless and shows up into a Macy's or shows up into an existing contactless provider or merchant accepting retailer, that is hugely concerning. I mean, so I think the approach and the tactics being taken also don't take into consideration just the retail point of view and how they want to have some sort of ownership over that engagement of that consumer, and ownership over how they leverage the data, and insurance that it's not going to be used in ways that could be used against them. So the tactics needs to change, I think, in the future.
Just one quick thing on that, because I think somebody mentioned earlier, because I think it's interesting, and we pay attention to this at GasBuddy in the field of convenience space with Amazon's opening of their convenience stores. They've talked about opening as much as 3,000 stores, and they're going into a pretty sizable market. Fuel convenience is a $600 billion market, one of the few markets that has had little or no disruption as long as anybody can imagine. But what I think is interesting is that they're kind of doing it themselves with these stores, because we talk about card not present, that you just scan when you go in, and then it's all cameras and making sure it's you that's present. Doesn't matter that your card's not there, I know that you're there. And what I like about that is that it's kind of put a fire under everybody else, because soon thereafter, whether it was weeks or months, there were multiple announcements on other retailers that now feel the pressure to keep pace. So, Amazon Pay is an interesting product. One that I use is an Amazon Prime.
Well, and what you're saying is it's an innovation
It's
driver.
basically an innovation driver, in that Amazon Pay, to the best of my knowledge, is not out there sort of forcing Amazon Pay and retailer. They went and opened a new retail experience, and I think what that is now doing is creating huge pressure for other retailers to keep pace with that experience.
Sure, play offense.
Yeah.
We got about 5 minutes remaining, so prepare your questions on this innovation front. Brynn, I want to go to you. What are things like that you think need to drive, more adoption, more ecosystem cooperation? We talked about the underbanked as like this just huge, vast market that's largely untapped and accessing them. So what are some payment innovations that you're seeing from the Lyft angle?
Yeah, so I think the biggest thing that we look at is with payment innovation is solving a business need. So where there's a gap, that's how we that's where we kind of say, okay, this is something we need to solve for first. So it's not about Apple or Google coming to us and asking us to integrate some tech. It is about thinking 50,000 foot view. Here are the things that our core customers, both riders and drivers, really need. So on the driver side, that started with our debit product, right? Because we were finding a lot of people who didn't have a bank account, and so that came from a core of just really solving for a business need. And so you can get this debit card. By the way, it also allows instant cash out, which was another thing that drivers were really asking for, and it gives them discounts at gas and grocery, which are two core kind of just human living needs that people need. And we'll look to build on that over time. And on the rider side, I think it really is about working collectively with the Apples, the Googles, the Chases, the cities of the world to say, hey, we can be a really powerful tool for you to drive transaction growth, and you can become that top of card in wallet and card on file. And once you're there, no one really switches it out. So let's work together on integrated loyalty solutions that we can deliver to our mutual customers. And so that's kind of how we're thinking about that. And then the first foray into that is a partnership that we launched earlier this year with MasterCard as they rebranded their World Elite card products, which is really in the core demographic base for us, which is the middle income to upper income class of cards, but we'll look to do more things in that space. But rewards have to be contextual. They have to be the right reward. It can't just be like, hey, here's a one size fits all program. It has to be really integrated into what that merchant cares about.
Individualized.
Yeah.
Alan, anything on payment innovation?
Yeah, I think somebody mentioned on the last panel, I think invisible payments. I think as much as you can push payments behind the experience, the better it is for the consumer, whether that's, again, making sure that loyalty offers rewards payments are happening in a single action. That's important. I think things like, Amex acquisition of Resi was kind of interesting from a payments perspective. If you guys know that, I mean, big reservation system, and essentially they're saying, look, we're going to give our cardholders value through the Resi network, and I think they're going to continue building that out from a dining perspective and add technology onto that experience so that their cardholders have value wherever they're shopping in the customer experience beyond just the payments and the 1% rewards or whatever they get back.
Right. Questions from the audience for this esteemed panel? While you're percolating thoughts, Mark, payment innovation?
So I think the two exciting things that come to mind for us, number one, mobile payments. We've rolled out our first one with Loves. They've got 300 to 400 locations, so you can go to Loves and pay with the GasBuddy app, and we'll have a lot more announcements there. And we will roll out mobile wallets as fast as the technology gets integrated, as those pumps are not internet connected quite yet, but they're getting so quickly. And I think the other one then for voice is very big for GasBuddy, because when you're driving a car, we do not want you fidgeting with your phone.
Right.
So GasBuddy today, we now have one of the more successful Alexa apps. You can now do all the things you could do in the GasBuddy app through the Alexa voice. And I think voice with purchase is something that will be very exciting. And I think that there'll be a lot of innovation there with the car first, because I just think it makes most sense, because it does solve a problem, because we don't want you searching
Purchase through Alexa, show up, fill up, go and grab your stuff without going to the cashier.
Yeah,
right?
yeah.
That's a real use
Yeah.
case right there.
And somebody earlier talked about proximity-based marketing. That is a great thing with GasBuddy is an always-on app. We always tell people that consumers need reminding far more than they need convincing. So a lot of times, when you think about those 40 million stops on a daily basis that U.S. customers are making for gassing up, they forget there's a Dunkin' around the corner or a McDonald's around the corner. So proximity-based marketing is huge, and we think that's a huge opportunity as well, and with lots of interesting partnerships and process around that.
Yeah. Any audience questions? Over here.
Yeah, I wanted to ask Laura, on the retailers driving.
Here, let me bring you a mic so everyone can hear you. Just hold on.
I'm going to repeat the question. That's okay.
The part about the retailers driving the innovation on the mobile payments and different methods. Is there any way? It seems like it's like the Raiders of the Lost Ark. You're looking for something that's just not going to be there. It's not going to be easy to get. What will it take for the merchants to find the things that they really want? Like in Europe, you got the 3D secure thing getting kicked back to them because it's not what they want for PSD2. All these things go on when they're trying to standardize something. But I'm just wondering, what is it that the merchants would really look for? Do you want a common open standard for everybody to be the same? Or I'm just kind of having a hard time always understanding who's going to find the thing that you really want.
Well, that's a loaded question. I think from a standards perspective, we want standards that we can leverage, that are open, meaning they're not dictated by a certain individual body. They're open and can be flexible. The problem that we have in the U.S. when it comes to standards is they come from a standards making body that is owned by the payment networks, And when it comes to then to market, there's rules that are layered on top of it. So by the time it gets to you as a retailer, it twists and turns exactly what you're actually being asked to deploy. So, so the standard side is a really tough one. I think things like 3D Secure can be very valuable. But if you look at how it was implemented or brought to market in the first place, it was hugely disruptive to the customer experience. They're coming back with another version. And to the extent that, we fully understand how that data exchange is going to work with 3D Secure 2.0 or EMB 3D Secure, whichever you call it now, until we see results that it's improving the customer experience, it's increasing approval rates, we have none of that data that's proven to show. So I think standards is a big, hairy area of concern from the merchant point of view. But I think where merchants really are trying to solve for, as I said earlier, think about if you've ever been to a Sam's Club, they're solving an operational problem at the same time they're solving a consumer experience problem. You, within the Sam's Club app, you actually check out yourself as you put your big, bin of toilet paper in your basket. You scan and you go through and pick up all your products. You scan the QR code as you go, or the barcode as you go. And then when you check out, it's all on your phone. But it's operationally something that's successful, because if you think about a Sam's Club, it's all, you check out in these maybe 11 lanes, but you all go through one exit point and they check your receipt. So now you skip those 11 lanes. So it saves, resources and labor and time, but also improves the customer experience that they're checking out along the way. But operationally, it can be delivered. Now, can that be done in a Walmart? Probably not, because there's not one exit point and there's probably 22 lanes. But what they're doing in Walmart is they're solving for other things like check your price, receipt retention, for returns, the loyalty program, as well as, kind of a lower cost form of payment, for them as well. So there is not one fix for every retailer to solve their problems. I think that's the point we were trying to make.
Yeah.
Is you can't hit the mass amount of retailers to solve a problem for everyone. It's going to be unique to each, depending on their operational model, their consumer base, and what they're trying to deliver from a customer experience standpoint.
Yeah.
So that's why it's a tough nut to
And
crack.
just at a high level, some retailers need the foot traffic. Others don't need the foot traffic, and they need throughput and efficiency, right?
Right.
So
Exactly.
it varies,
Exactly.
right? Okay. Well, thank you very much. I think we got the sign.